Hello traders, good morning, good afternoon, good evening. Bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders, TSTW SYS 008 traders. And our website is www.stochastic-macd.com. For all trades, we will use the 5% money management rules and apply stop loss in all trades. This video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. Let's get started. The title of the video is The Power of the TS2050 Trading System. It is a very simple trading system, but it is also a powerful trading system. The indicator that we use for this simple free trading system is the moving average, the exponential moving average 20, okay, the exponential moving average 50, and the Bollinger Band 50, volatility 2. So we use only three technical indicators. The first is the EMA 20, the second is the EMA 50, and the third is the Bollinger Band 50, volatility 2, 50. All right. One can apply this trading system for currencies, for commodities, all right, and also for stocks. One will select financial instruments that are moving. We don't want financial instruments that remain in place. We want to trade like indices, ETF, all right? These are the things that we want to trade. We want to trade major currency pair, like the Euro USD, the Pound dollar currency pair, the Pound Yen, the Dollar Yen currency pair, the Australian US dollar currency pair. We want to trade stocks that are listed on the major indices, like the FTSE 100, the DAX 30, the CAC 40, the Dow 30, the Nasdaq 100. These are the stocks that we want to trade, all right? But the rules are very simple, all right? We are looking for a setup, and the TS2050 gives to traders the best setup. I want to show you something here on this chart. The signals are very simple. We want the exponential moving average 20, which is the blue line here, should be below the declining exponential moving average 50, is the pink one here. So we want to pay attention to the slope of the exponential moving average 50, and we want the exponential moving average 20 to be below the exponential moving average 50. When the 20 is below the 50 and the 50 is declining or sloping down, and the third condition, and the price rally up to the upper end of the Bollinger Band 50 volatility 2, we will look for opportunity to sell using, very important, a top-down trading method. As you can see on this chart, we are on the weekly chart. The 20 is below the 50, and the price rally up to the edge of the upper bound of the Bollinger Band 50 volatility 2. Now, trader will also notice that there was a bearish engulfment here. There was a bullish candle here that was cancelled by this bearish candle. Can you see on the chart? That's where I put the red spot here. All right. So once the price touches the upper bound, we will use, very important, a top-down trading method. So this is the setup that we see on this weekly chart. We will not enter the trade on this weekly chart unless one is using the call option. But it's very important to wait for the signal before buying a put option. All right, this is very important. All right. So we want to use a top-down trading method to participate in the trade. As you can see, as the price touched it here, there was a bearish engulfment, and the price went down big time, all right, from the level of from this let's be conservative here, from the level of 135.65. okay, the price went down to the level of 11815, a huge profit in this session after this bearish setup, okay, that the TS20 has exposed clearly on this chart. So from this weekly chart, we will move, what we will do, the step that we follow, when we see the setup on the weekly chart, we want to be curious, we will look on the monthly chart, the higher time frames, and also, if you like, we can look on the quarterly chart. So when we see the setup on a particular time frame, in this case, we are on the weekly chart, we see a setup like this on the weekly chart, it's bearish, we want to be curious, we will check the monthly chart, and maybe even, okay, the quarterly charts. Once we are satisfied, or once we have, okay, certified the setup, or validate, once we have validated the setup, we will now go to the signal time frame and wait for a signal. When we receive the signal, we will go to the low risk entry time frame to enter the trade. For traders that are using, okay, in this case a put option, or traders that are using CFD, you will make your decision accordingly using, okay, a variable, a top-down or a multiple time frame, a trading system. All right. As you can see here, the price went down. Yes or no? It went down. Very simple and very powerful. The idea behind this trading system is that when the 20 is below the 50, the market is bearish. The momentum is bearish. The price in normal condition should remain below the exponential moving at 50. If the price rally up above the declining exponential moving at 50, it is in the wrong place. It's a kind of distortion that the market must rectify. So the price shouldn't be riding above the declining exponential moving average 50 if the exponential moving average 20 is below the declining exponential moving average 50. Here we can see that the price is in the wrong place because the market conditions are bearish. The price is in the wrong place. We will not force it because if the price starts going down, the first support level is the exponential moving at 50 right here. You can see that the price tries to change direction here. So if you receive a signal here, this is what I say to traders, when we enter the trade, we must manage the trade. The price can change direction at any time. We want to pay attention to the market environment and the fundamental using the trading triangle. This is very, very important. So as we buy here, we want to pay attention to the first and nearest support level. See, there are support here. Price touch it here. Do not ignore those support level. You see the price went down, but try to change direction here. This is where a lot of day traders and swing traders can get into trouble. If you do not enter the trade properly, or if you do not manage the trade, you can get into trouble. All right. So you see now, but slowly, but gradually, the price did not go down in straight line. You see some days the price went back. For some week the price went back up, but then went down again. And this, you see, some week the price went up. Yes or no? But the direction of the price was bearish, and at the end the price went down here. All right. The green candle during the downtrend allow traders to sell again because the market is bearish. We want to sell after a rally. All right. Okay. I want to show you another example. This time we will look at the dollar yen, and I will also show you a stock because this is valid for stock, for commodity, and also for ETF and the major indices, of course. All right. I want to show you another currency before we move to a particular stock. I want to show you the dollar yen currency pair, and this time we will not stay on the weekly chart. We will go to the daily chart. I want to explain to traders that this trading system, the TS20, is valid for all time frames, but it's better for traders to use, okay, the top-down trading method, which means one will recognize a setup on a higher time frame, validate that setup, will go to a signal time frame, which is different from the setup time frame, and when the signal is given, one will switch to another time frame, which is the entry time frame. This is what we call a top-down trading system or a multiple time frame trading strategy. All right. So we want the TS2050 to give us the setup on a higher time frame, and then we will use a top-down trading method to enter the trade. We do not want to enter the trade straight away as soon as we see, okay, the setup on any time frame. All right. This is very, very important. As you can see, how a trader enters the trade is very important. The entry point is the most important trade, especially if you are a day trader or swing trader. All right. Unless you are buying and hold for a long time, you want to buy and hold at a value support level. All right. So here it is, again on a daily chart, looking at the dollar yen. I want to check my time quickly because I don't want this video to be more than 20 minutes. Okay. All right. So here we are, again on a daily chart. The previous example that I have given you was bearish example. In this scenario, I want to show you a bullish example. Here we are. The exponential moving average 20, which is the blue line on this chart, okay, is above the rising or the bullish exponential moving average 50, the pink line here. All right. So we want to pay attention to the slope of the 50. This is very important. When the 50 is rising, all right, is telling us that the bullish momentum is strong, except, repeat, except if the price is at a conversion point or at a major resistance zone. This is very important. Repeat, if the exponential moving average 50 is rising, it's signaling to us that the bullish momentum is strong and intact, except if the price is at a conversion point or at a major resistance zone. Right now, as you can see, the price is rising. Okay, the exponential moving average 50 was rising. The 20 was above it, confirming to us that the bullish momentum is intact. The price slowly but gradually pulled back to here we are. This is what I'm talking about. The price pulled back to near. Sometimes the price may not tap the lower bound, as you can see, did not tap it. All right, but the price will come near, okay, in the vicinity of the lower bound. All right, this is very bullish. If the price did not tap the lower bound, traders must pay attention carefully. Why the price did not tap it? All right. Sometimes you will see that the price will not tap it if the price display a double bottom pattern. So you see here there was a support here, and the price was trying to tap the lower bound of the 50, but the price also found a support before that. It is very important for traders to draw the support, the resistance, and the trend line on their charts if they are about to enter at all times, but of course, especially if they are about to take the signal within the bounds. So here we are, the price changing direction inside the bound and did not touch the lower bound or did not tap the lower bound. We want to be very careful. We want to draw the trend line. We want to draw the support and know that we are taking the signal at a valid support level. The inverse is true where we are taking a bearish signal inside the channel and the price did not reach the upper end of the bounds. You see here? So why the price stop here? There's a support here, price changing direction here, and price is validating this support level. Price changing direction here. We will not enter the trade on this daily chart, ladies and gentlemen. We will use a multiple time frame trading method to participate in this trade. So this is the setup. We will go to, okay, a signal time frame, wait for signal, and then go to a low risk entry time frame. I recommend to, this is an excellent, beautiful setup for a TSTW 24, TSTW24 and TSTW SYS008 traders, especially the SYS008 traders, because it's mainly for swing trading. For day trading purposes, we see a bullish setup. Okay, we are busy giving priority to bullish signal each day that we are day trading. All right. So you see now, it's went up big time, okay? So from this level here, all right, 92.92, we price around quickly to this level here at 96.91, and continue the move to the upside, okay? So here it is. It was a valid setup here. The bullish momentum was intact on this daily chart. I have another example for you because I don't want to go over my time, okay? I want to show you another stock, a beautiful setup. This time we want to look at the Google stock, all right? This is Google stock. We're going to go to the 2-day chart. You remember for the USD yen, we were on a daily chart. This time we are going to 2 days chart. 2 days, all right? Here it is, 2 days. I want to show you a beautiful example that happened recently, okay? In fact, you see that's last week, okay? Okay, 1 moment please. I'll get this soon. This is Google stock on the 2 days charts, and then we have a beautiful setup here. You can see on this chart the exponential moving average 20, the blue line is above the pink line, which is the exponential moving average 50, telling us that the bullish momentum is intact. Google stocks, as you can see, the price pulled back to the edge of the lower band Bollinger Band, the lower band of the Bollinger Band 50 volatility 2, where I put the green spotlight here. Trader will use a multiple time frame trading method or a top-down trading method to participate in this trade. As you can see, the price was going up. As the price reaches this resistance level, the reason why the price gap up, there was also Google has exceeded the analyst expectation. This is what we are talking about, the fundamental. All right, Google has exceeded the analyst forecast. All right, so because the stock has exceeded the analyst forecast, it was very bullish. But before that, as you can see, there was a bullish setup for TS20 traders using a top-down trading method to participate in the trade. They will be already in this trade, and if they are still in this trade, they will be catching this move, a big move. Okay, as you can see, the price gap up, the price ran from this level of in the zone, or call it the zone of 850, and went up to the zone of 1,011 dollar regions. Okay, this is a $161 move, or 161 00 pips move. All right, from the zone of $850, the stock gap up to the zone of $1,011 regions. A huge surge for this Google stock. As you can see, nothing has changed here. The exponential moving at 20 was above the rising. Okay, you can see the slope of the bullish exponential moving at 50. The price manages to touch the lower band. You can see that the volatility was low because of the contraction in the session of the Bollinger Band. And from that point, trader will use a top-down trading method to enter the trade, and boom, the stock ran away big time. $161 move. As you can see, the system is very simple, but we do not want to enter the trade. As you can see here on these 2 days charts, we do not want to enter the trade on a 2 days chart. We want to use a top-down trading method to enter the trade. When we enter the trade, we must manage the trade. So you buy here, the price going up nicely. Okay, if sometimes you may decide to close some trade and re-enter again on different stages. Sometimes you will have to remain in the trade. All right. Okay. Which means you move your stop loss at least to break even. All right. You secure some of your gain and you let it run. And if you were doing that at this point in time before Google, exceeded the analyst forecast, you will be in this huge move, this big gap up here. As I explained to traders, 3 things are very important: the setup, the signal, and the entry point. There are other 3 things that I mentioned before. The first is what, ladies and gentlemen? The mind games, all right, the money management, and the trading methods. It is also very important for traders to combine a technical setup with the fundamental. When we see a technical setup, this is a technical setup, we want to verify the fundamental. And if the fundamental are sound, we can even buy and hold in a normal stock portfolio that we can open with our bank that is paying a dividend that has a dividend reinvestment plan. All right. You see here? So trader can use here a call option. They can use CFD. They can day trade. They can swing trade. They can position trade using different trading tools to participate in the market. But the most important thing is to control the risk and to enter the trade at a low risk point and also to be rewarded. This is the power of the TS2050, a trading system written by Georges Bullish, myself, the founder of stochasticmarkd.com. As we are speaking now, ladies and gentlemen, I have finished to write the document of the TS2050. The document, the system, I will give it for free for traders that, okay, I will give it for free to traders that members of our website and also to, okay, TST traders. But I will direct, if you want to have the system for free, how do you need to get it? Do not write to me and say, send it to me. You will have to go to www.stochasticmarkd.com. All right. Click on documents. All right. And then register for free. Okay. And then relog in for free. Okay. And download for free the TS2050. Now remember, this system will be available on the 24th of October in the evening. Okay. Around 8 p.m. London time on the 24th of October 2013. All right. I want to show you a part of this document. I want to open it now. You'll see it here. It will come up soon. Just waiting for my computer to load. So if you want to have the TS2050 for free, all right, this is very important. All right. Traders must go to www.stochasticmarkd.com. They will click on the page that we call Documents. When the page opens, they will register for free, and then they will re-log in again for free, same place, all right? And then they can download for free the TS2050. The document, the TS20, the trading system TS2050 will be available at 8 p.m. London time on the 24th of October 2013. Do not send me any email to ask me to send you, okay, the trading system. You can go directly to the website and download it for free. This is the document of the TS2050. As I say to traders, I've started writing this to them and I've completed it. There are more work to be done, more, okay, the final touch, okay, and then we'll be ready by Thursday, the 24th of October 2013. All right. I hope you have learned something from this video, okay, and I will put into use to make excellent decision. If one wants to buy, one will look for a value signal. Very simple. But one will not stop there alone. One will also check the fundamentals. This is very important. If we want to sell, we are looking for, okay, resistance level. It's very important. This is what we call the setup. Today, as you can see, it was this weekend. A lot of traders will be looking at different charts. What are they looking for? They are looking for the setup. But a lot of traders get into trouble. They trade the setup alone. They don't pay attention to the market. They don't pay attention to the sector. They don't pay attention to the market environment. We use something that we call the trading triangle. Traders must always combine the technical with the trading triangle. When one is using the trading triangle, one is trying to adopt the mindset of professional traders. The market first, the sector, before the individual financial instrument. The heart of the trading triangle is the market leaders, the fundamentals, and economy news. Combining all this together, we allow traders to make excellent trading and investment decisions. We see all the time, if one is using a trading system, one should understand that the trading system allows a trader, okay, To manage the trade, to be in charge of all decisions, one should not use a trading system like a trading robot. But we see sometimes when a trader will be using a trading system like a trading robot. When one is trading, the market is dynamic and changing all the time. Sometimes it's not worthy to enter the trade or even to be around. Ladies and gentlemen, thank you for watching, and we will speak to you very soon. We are the TSTWSYS 008 traders. Speak to you soon.